2021 earnings forecast, as we believe lower earnings from power generation activities will likely be offset by higher dividend income from both HND and QT. We attended PPC's AGM on April 23, 2021, at which management expressed its full confidence regarding the potential recovery of Vietnam's electricity demand as well as PPC's earnings and cash dividend after a low base in 2021. According to the company's guidance, overall, we do not see material downside risk to our 2021 earnings forecast, as we believe lower earnings from power generation activities will likely be offset by higher dividend income from both HND and QTP. Pending for a fuller review, PPC guides for a 66% decline in 2021 GPBT, mainly due to lower contracted volume, a conservative assumption for dividend income and absence of one-off FX payments. PPC expects its PBT to drop to 415 billion Vietnamese dongs, 18 United States dollars MN, in 2021 versus 1.2 trillion Vietnamese dongs, 52 United States dollars MN, in 2020 due to the following. PPC's contracted volume is projected at 3.2 billion kilowatt-hours in 2021 32% lower than in 2020. The cut in contracted volume is greater at Pha Lai 1 relative to Pha Lai 2 and other similar coal-fired power plants, with Pha Lai 1's contract volume plummeting by 65% YoY. That said, management is confident that power consumption will more fully recover after 2021. Implying that PPC's contracted volume will gradually improve in the future. These comments are in line with our expectation. PPC's major maintenance expenses in 2021 are guided to reach 432 billion Vietnamese dongs, 19 United States dollars MN, versus 352 billion Vietnamese dongs, 15 United States dollars MN, in 2020. We note that PPC has a track record of planning for higher maintenance expenses. For example, the company guided for 567 billion Vietnamese dongs, 24 United States dollars MN, of maintenance expenses for 2020 but only used 62% of that budget in 2020. Management also noted that due to difficulties caused by lower contracted volume in 2021 PPC will likely delay any unnecessary maintenance projects to ensure that the company can achieve its profit guidance. As such, we see no material risks to our current forecast for relatively unchanged maintenance expenses in 2021 versus 2020. PPC's profit guidance implies a conservative assumption for dividend income in 2021 While no details regarding dividend income were given in the company's guidance, we estimate that PPC's dividend income will be at least 365 billion Vietnamese dongs, 16 United States dollars MN, as HND and QTP are expected to pay the remainders of their FY 2020 cash dividends of 2,175 Vietnamese dongs per share and 1,000 Vietnamese dongs per share in 2021, respectively, based on HND's AGM and QTP's guidance. PPC's dividend income could be higher than the above amount if HND and QTP decide to advance partial payments of the FY 2021 dividends in 2021. No assumption for one-off delayed FX payment for historical FX losses in 2021 versus 240 billion Vietnamese dongs, 10 United States dollars MN, in 2020. Management suggested that electricity demand will strongly recover from 2022, supporting PPC to experience higher earnings going forward. Per PPC, its contracted volume cut in 2021 is due to a cumulative effect of several negative events, including 1. A boom in new renewable energy capacity in late 2020, 2. Abnormal rainfall in late 2020, and 3. Lower electricity demand caused by COVID-19 related disruptions. That said, management remains bullish on PPC's future earnings growth and dividends as PPC expects electricity demand will return to its growth trajectory with Vietnam and the world recovering from COVID-19. Regarding competition with renewable energy, management is confident that demands for dispatchable power sources, such as coal-fired power, will remain robust as 1. New solar power sources can only generate a meaningful amount of electricity for roughly 4 hours during the days, and 2. The pace of installing new renewable capacity will significantly decelerate versus its historical growth. PPC received approval from the local government to bring the Pha Lai 3 coal-fired power plant, 600 megawatts, online between 2025 to 2030. Per PPC, this new project will still require final approval from Vietnam's new Prime Minister. In our view, contributions of Pha Lai 3 would double PPC's core earnings potential as Pha Lai 2, 600 megawatts, is currently PPC's main earnings contributor, 90% to 95% of total EBIT, and as Pha Lai 1 has operated past its theoretical useful lifespan of 30 years. We have yet to incorporate Pha Lai 3 into our forecast. PPC proposed to pay a total 5,894 Vietnamese dongs per share cash dividend for FY 2020, 22% dividend yield, with the aim to pay soon. This amount is significantly higher versus our forecast of 2,500 Vietnamese dongs per share, 9% dividend yield. Deducting the 1,500 Vietnamese dongs per share that PPC already advanced in December 2020 and March 2021. PPC would pay the remaining 4,394 Vietnamese dongs per share, 16% dividend yield, to shareholders as soon as possible. PPC guided for a 2021 GDPS of 1,500 Vietnamese dongs, 6% dividend yield, implying a payout ratio of approximately 120%. Based on PPC's profit guidance, this amount is compared to our 2021 FDPS of 2,500 Vietnamese dongs, 10% dividend yield, implying a payout ratio of approximately 100% based on our 2021 F profit forecast. PPC agreed with REE's proposal to keep several items regarding the voting approval threshold in PPC's charter unchanged. In PPC's AGM document, the company proposed to change PPC agreed with REE's proposal to keep several items regarding the voting approval threshold in PPC's charter unchanged. In PPC's AGM document, the company proposed to change several items regarding the approval threshold from 51% or higher to 50% or higher for voting during AGMs and for voting by document to be consistent with the new enterprise law. However, RE, one of PPC's major shareholders, commented that these are unnecessary and proposed that PPC revert the above changes. REE's proposal was accepted and received 96% of votes in its favor. PPC owns 2 coal-fired power plants in northern Vietnam with capacity of 1,040 megawatts. Pha Lai 1, 4 by 110 megawatts, 34 years old, and Pha Lai 2, 2 by 300 megawatts, 17 years old. PPC also has 27% and 16% stakes in theHai Phong, HND, 1,200 megawatts, and Quang Ninh, QTP, 1,200 megawatts, coal-fired power plants, respectively.